Good morning, everybody. Mike Vaki, Princetontrader.com here for ntmarkets.com with your Tuesday morning pre-market webcast. Okay, daily chart of the ES, and we had the big gap up Sunday night. My key to yesterday was whether or not the bears are going to be able to trade below 1692 on the December contract on the continuation chart. And not only were they able to do that, they were able to maintain that level as resistance. So I currently, full disclosure, I have a short on right now, 1690. I put it on yesterday before the close. I took a couple handles off down when we traded to 16, down at 1688 for a couple of handles. I still got the balance of the position on, and I'm going to trade around it a little bit because it really looks like now we're going to go down and fill that gap. Gap fill would be, 83, 83, 82.75, whatever you consider a full gap fill is. The Friday high is 83.75. So, anything below 83.75 fills that gap. Now, a gap fill is just as good for the bulls as it is for the bears. If you're a bull, you want the gap to be filled because you don't want this issue of a gap hanging over the week where you have a chance to go up and make new highs. So to fill the gap and then to go up and kind of walk this tape up into the Fed and maybe get a pop, if the bulls are able to do that, I think it opens up much higher levels. And when I say much higher levels, I'm talking about 1715 to 1725. If you're a bear, you want to get down and fill this gap immediately. Yesterday's candle, even to the casual observer, is going to be viewed as price rejection and potentially a double top. So you need to push that scenario. You have to push the double top scenario. The best way to do that is to fill the gap and continue to push lower, get back down into Friday's lows, into that 1675, 1674 area, and see if you can go down and retest 1670. So it's really a jump ball. The bulls got carried away, whether on Larry Summers and Syria and all these other things, these cross currents from the weekend, and they weren't able to hold the levels, and they lost the key 92. So the ball really is in the bear camp right now. Ball's in the bear camp, and we'll have to see what they do with it. With respect to the pivots, the daily pivot is 1693.67. So we're underneath the daily pivot. 45-day pivot is 1673. So we're not stretched at all. We weren't even stretched when we were printing the highs at 1703.75. So we're in a neutral position. It's really a jump ball, but the bears need to push it and fill the gap. If the bears fail to fill the gap, then it'll give the bulls a chance to go up and take another shot at 1705 on the continuation chart. So everybody have an amazing day. Sign up for our webinar tomorrow after the close, 4:30. Webinar on swing trading. A webinar on swing trading on Fed Day. I think that's a pretty good day to have a swing trading webinar, everybody. So we'll be talking about markets, talking about what's going on, and talking about where we think the markets are going to be throughout the fall. So follow us on Twitter at Princeton Trader. Check out the website. Check out the chat room. We would love to have you. I'll be back tomorrow morning with another webcast. Trade them well, everybody.